Good morning, Miss Nabilah.
Good morning, ma'am.
In this morning meeting, I just want to discuss the performance of our company, which has not recovered since the COVID-19 pandemic. Because overall, the economy is starting to get better. Meanwhile, even though we don't have any losses, we don't lose our money, but our company is still lagging. We are still stuck in our position since the pandemic. For this reason, I ask you as a marketing manager to improve your department's performance, maybe by implementing new strategies so our company's conditions can immediately improve. I want this quarter sales target increase 25% from the previous quarter.
I'm sorry if our performance has not been able to satisfy you. I will try my best so that it can have a significant effect on the condition of our company in the next period.
Okay, I will wait for the best result of your department performance. Thank you, Ms. Nabilah.
The director just called me to discuss the performance of our department. He said that he wants our sales target to reach 25% higher than this quarter in the next quarter. For that, I will hold a meeting to design a new strategy and other things that affect our marketing. I ask you to supervise and mobilize all sales staff so that they can work optimally and help meet these targets.
I'll try my best.
Okay, remember that this is your responsibility as a sales coordinator, so try to be able to meet these targets, or there will be consequence for you later if your performance can satisfy me.
Is it possible to make it fake? Hey, what's going on?
Hey, what you do? Wanna hang out?
It sounds perfect. Tomorrow in the meeting room 4 p.m. after work.
Alright, see you there.
Hey, I got a problem. I'm in the end of the road. The director told me that she wants the target 25% higher than this quarter. Also, the manager can't be quiet. What a freak.
I see. Don't be stressed out. Let's make a plan. But it's a little bit bad if you want to.
Doesn't matter. Your shit helps me out. I've been thinking about faking the sales invoice quietly.
Good idea. As long as I am a delivery manager, I'll help you to keep it safe.
The illustration video tells us about the sales coordinator who has committed fraud by making fake order. First, he made a fake sales receipt and also the fake bills. And after that, the inventory items are removed from the warehouse as if they were going to be shipped to the customer. And this fake order are recorded in accounting system as account receivable. By committing this fraud, the sales coordinator can achieve the 25% sales target set by top management. But as a result of this fraud, if it continues for a long period, company can lose their profit due to the high number of account receivable that cannot be paid because the receivable came from the fake order. So, in this video, we will inform you about the fraud in the auditing. Okay, before we discuss in more detail about fraud, we must understand that basically, auditing standard distinguish between two types of misstatement. First is fraud, and second is error. Either type of misstatement can be material or immaterial. A fraud is an intentional misstatement of financial statement. Meanwhile, error is unintentional misstatement, or we can call it human error. Example of error, the wrong process of calculation or the application of the wrong accounting standard due to the ignorance. Okay, we will continue to the definition of fraud. Fraud, based on the AIPA 2013, is an act committed by one or more people in management or those charged with governance, employees, and third party that involve the use of deceptions to gain unfair advantage or violates the law. Okay, stay tuned because next we will talking about type of fraud, the condition of fraud, or maybe the factor that can influence people to do fraud, and the factor risk assessment.
Usually, this fraud is done by manipulating the reporting of assets, revenues, and expenses. And this fraud usually involves more than one department. If it continues, it will have a destructive impact on the company. Misappropriation of assets is normally perpetrated at lower levels of the organization hierarchy. In some notable cases, however, top management is involved in the theft of company assets. Because of management's greater authority and control over organization assets, fraud involving top management can involve significant amounts.
Condition of fraud. The error occurs because it is caused by an element of intent and an attempt to cover up the fraud itself. Of course, this is very detrimental to the company's business. 3 conditions for fraud arising from fraudulent financial reporting and misappropriation of assets are described in the auditing standards. The fraud triangle is a theory developed by Donald R. Regy in observing the causes of fraud. It is called the fraud triangle because in the fraud process, 3 essential stages influence a person to commit fraud. 3 conditions are referred to as the fraud triangle. There is incentives or pressure. Management or other employees have incentives or pressure to commit fraud. This pressure is related to a person's intention to commit fraud. A person who commits fraud must have his motivation or encouragement both from himself and from other parties, such as personal economic pressure. For example, someone with a high lifestyle but not balanced with his income may be a cause of fraud. Another example, greed or addiction. This incident is caused by a human sense of self-dissatisfaction, so that he is determined to do anything for his greed for personal or certain group interests. Work pressure. Most common this incident is due to demands from the company's high level to the lower level. This can encourage fraud because the lower levels are afraid and burdened by these demands. For the second one, opportunities. Circumstances provide opportunities for management or employees to commit fraud. Usually happens because, first, control from the company is still weak. Internal control plays a significant role in preventing fraud opportunities in business. Internal control in the company can be preventive or reactive. For another one, the SOP that is running is not conducive or not so well. It's like receiving transaction money without an invoice because the customer feel they are already closed or something like that. The existence of multiple jobs in an employee. This situation gives a person more opportunities to find loopholes and it is easy for fraud to occur. And then unfavorable work situation. This often happens because the executors do not feel they have an advantage. What often happens is bribes. And for the last one, attitudes or rationalization. An attitude, character, or set of ethical values exists that allows management or employees to commit a dishonest act. Or they are in an environment that imposes sufficient pressure that causes them to rationalize committing a dishonest act. Example, for fraud preparators often use the alibi that the salary given doesn't follow the company's benefit. Another reason is that they feel they have significantly contributed to the company and deserve it, so that they carry out this fraudulent act.
Assessing the risk of fraud. In conducting a fraud audit, company can carry out a fraud risk assessment. The first thing to do is professional skepticism. Second is searches of information to assess fraud risk. Third is documenting fraud assessment. First, professional skepticism. In conducting an assessment of audit risk, the nature of this professional skepticism must be maintained and enhanced by the auditors, namely by first is questioning mind. Auditor need to maintain a questioning mind throughout the audit to identify fraud risk and critically evaluate audit evidence. There is always a risk that even an honest person can rationalize fraudulent actions when incentive or pressures become extreme. And then there's critical evaluation of audit evidence. Upon discovering information or other conditions that indicate a material misstatement due to fraud may have occurred, auditors should truly probe the issues, acquire additional evidence as needed, and consult with other team members. Auditors must be careful not to rationalize or assume a misstatement is an isolated incident. For example, say an auditor uncovers a current year sale that should properly be reflected as a sale in the following year. The auditor shall evaluate the reason for the misstatement, determine whether it was intentional or a fraud, and consider whether other such misstatements are likely to have occurred. Second is searches of information to assess fraud risk. The 5 searches of information to assess this fraud: 1. Communications among audit team. 2. Inquiries of management. 3. Risk factors. 4. Analytical procedures. And last, other information. Let's see the illustration and examine the points closely. First, there is communications among audit team. Auditing standards require the audit team to conduct discussion to share insight from more experienced audit members and to brainstorm ideas. Second, inquiries of management. Auditing standards require the auditor to make specific inquiries about fraud in every audit. Inquiries of management and others within the company provide employees with an opportunity to tell the auditor information otherwise might not be communicated. Moreover, the responses to the auditor's question often reveal information on the likelihood of fraud. Third, risk factors. Auditing standards require the auditor to evaluate whether fraud risk factors indicate incentive or pressures to perpetrate fraud, opportunities to carry out fraud, or attitudes or rationalizations used to justify a fraudulent action. Fourth, analytical procedures. Auditors must perform analytical procedures during the planning and completion phases of the audit to help identify unusual transactions or events that might indicate the presence of material misstatements in the financial statements. And fifth, other information. Auditors should consider all information they have obtained in any phase or part of the audit as they assess the risk of fraud. After professional skepticism and searches of information to assess fraud risk, the last thing to do is documenting fraud assessment. Auditing standards require the auditors document the following matters related to the auditor's consideration of material misstatement due to fraud, like the discussion among engagement team personnel in planning the audit, specific risk of material fraud that were identified, the discussion among engagement team personnel in planning the auditing, or etc.
Financial statements are one of the main things of a company that can affect the making of an economic decision. Every data and aspect in an economy report is an important point in a general study of the company's economy. However, in this financial reporting process is often found fraud that can harm the company or make the decision become wrong. fraud often occurs in an organization, management have responsibility to make the governance to minimize the occurrence of fraud. The auditor can hold the supervision and give the advice and also conduct more detailed examination whether management has done good governance so the fraud can be minimized. Okay, I think this is all from us. I hope this video is useful for you guys. Thank you for watching our video and see you.